I'll go on YouTube. Well, we see where Dollar Financial Service drop its second quarter result this week, and Blue Collar Finance are going to review that result. What we're looking at is Dollar's second quarter results. All right, and Dollar has done exceptionally well in the second quarter, but there is no surprise in Dollar's result, I believe, to the market, because the market was anticipating Dollar doing well. All right, so Dollar has a lot of growth ahead of it, and the company is really just growing in its full potential. All right, so what we have is a dashboard of Dollar. All right, the main highlights of the second quarter result. Now, what I wanted to focus on is the loan portfolio. All right, so the company's loan portfolio is looking good. All right, so we see where the company finally breaches that $1 billion mark. All right, so at IPO, the company had a loan portfolio of some, I guess it was $800 million or a shade above $800 million. All right, and we see where Dollar finally breached that $1 million mark. $1 billion mark. So the company for this 6 month lent out over $200 million. All right. All right. So another thing that is important, the loan book was up some 177%. So that's exceptional result. Also, total asset increased some 100%, but total asset, given the nature of the company, what the company does is to unlend money. All right, so majority of the company's asset will be the loan portfolio. All right, so total asset increasing accordingly. Total income. All right, the company reported total income as increasing some $176 million. 176%, all right, to now $298 million. All right, so total income is up. Majority of the company's income is net interest income. Again, given the nature of the company, that's what we're expecting. All right, so almost all of the company's income is really coming from the loan portfolio. So as the loan portfolio grows, the total income would grow accordingly. Operating expenses up some 83%. And some of this increase is due to expenses related to the company IPO. All right, so the company IPO'd recently, pulling some $500 million from the market. Raising some $500 million from the market. $250 million of that went to paying off some loan, all right, that was borrowed on behalf of the company, while the other $215 million was plowed into the business and went to enhance the company's loan portfolio. So most of that expense was related to, a lot of that expense, not most, was related to the company IPOing in just recently. All right. So as the company moves forward, we are expecting the growth in the expenses to taper off a bit. All right, so operating profit. And this is profit before tax. All right, so profit before tax, we see that increasing some 368%. All right, so here is Dollar with some huge increase right across the board. All right, so profit before taxes is $132 million, 368% above what it was this for the same period last year. All right, so dollar making some strides, but none of this came as a surprise to the market. I mean, in the prospectus, when you look at the company result for the first quarter, it shows similar pattern. All right, because you see where the first quarter the company was making some return that was greater or 3/4 of what the company made for the entire year. All right, so the first quarter this year, the profit was about 3/4 of what was made for the entire year last year. So we see where the company had a lot of growth ahead of it. All right, so none of this really came as a surprise. The company recently entered the Guyana market, which we believe can grow as fast as the Jamaican market, or even to become a bigger market than the Jamaican market. All right, so we are looking to get more information from the company as to how the company is operating and the company is trading in the Guyana market. All right, so here it is, dollar with a lot of showing a lot of potential, a lot of growth coming in across the board, as I said, but none of this is really a surprise to the market. People were really, our investors were really expecting dollar to knock it out of the park, as the company is currently doing or showing. All right, so one of the things that we were interested in at Blue Collar Finance is the fact that dollar, we were concerned about where the money would come from to fuel the growth that the company has. All right, so for Blue Collar Finance, we're expecting dollar to grow as dollar is growing. And we always said that the company does not have a problem on lending those money, all right, because the company has a lot of opportunity to grow, a lot of businesses coming into the company or coming to the company, so the company does not have problem on lending those money. Now, the problem that we saw dollar having is its inability to collect the money, recollect those loans as fast as we believe it can, or as fast as Access is collecting those money and re-lending those money again. So cash was a problem to us. Having the money to unlend was a problem. All right, so we're here, dollar has cash of some $81 million. All right, so at the prospectus date, the company has just $2 million in cash. All right, so coming to the market was necessary because the company needed the money in order to fuel the growth. All right, so now at the 6 month period, the company now has some $81 million in cash, even after the company grew its loan portfolio over $250 million. All right, so total debt, $430 million, up 45%. All right, so you see where total debt is less than 50% of the company's loan portfolio. So we believe that the company has room to grow its debt, all right, to become even a larger part of its loan portfolio. Now, when you look at the official banking system, debt is always larger than the company's loan portfolio. All right, so sometimes debt is like twice the loan portfolio. All right, so but given the operation of the official banking system, the fact that they have free cash coming into that system as deposit, they can afford to maintain such debt ratio. All right, so we're looking to see dollar has the capacity to increase its loan or its debt as a percentage of the total loan All right, so we're looking to see the company do that. All right, as the loan is now $1 billion and the debt is just $430 million. All right, so when you look at non-performing loan is 6%, and I think that is a 1% increase from the 5% it was at IPO. Expected credit losses remains at 5%. All right, so what we want to do is to dig into the issues that we saw that dollar had at the IPO, all right, which is its ability to collect those money and re-lend those money, all right, because we believe that's a cheap mean of cash. And we want to see how well dollar is collecting its money and re-lending those money. All right, so let us, before we get into all of that, we can just look at some of the notes which might assist us in understanding the operation of dollar and how the company loan portfolio is structured. All right, so in the highlighted section, it reads business loan accounted for 74% of total loan portfolio, with personal loan accounting for the remaining 26%. All right, so we see where the loan portfolio of dollar has changed in terms of its structure. All right, so at IPO, I guess business loan was about 66%, 68% thereabout. So we see where business loan has now taken up a larger chunk of the loan portfolio to becoming some 74%, while personal loan is decreasing as a proportion of the total loan portfolio. Personal loan was some 32%, I think, and at IPO, we see where personal loan is now 26%. All right. Now, as I always said, dollar has what I called a niche market. All right. So when you look at Access Financial loan portfolio, also when you look at ISP's loan portfolio, majority of their loan goes to servicing or goes to personal and consumption loan. All right. So they were lending a ratio of 90-1. All right, I mean 9-1, 9 personal loan to 1 business loan. That's how the entire credit market, microcredit market loan ratio is. I was where dollar has reversed that ratio to lend the majority of its money to small and medium-sized businesses and a small portion to personal and consumption loans. All right, so that's about what it looked like, about 3-1. All right, so dollar is about 3-1 in terms of business loan to consumer loan. All right, so secured loan represents 71% of the loan portfolio. Again, dollars increased that, all right, because secured loan was less than that at IPO, and where unsecured loans account for the remaining 29%. So the company is still prudent on the way it goes about lending money. All right, so the company is not taking a lot of risk in its loan portfolio, and as you can see, based on the non-performing loan that the company held at just 6% of the total loan portfolio. However, one other issue we have with dollar is that dollar is not forthcoming in terms of its disclosure, because we like to see the loan bucket being broken down into different periods, like a 30 days, 3 months, 4 months loan, or whatever. All right, in terms of loan, non-performing loans, we like to see those figures broken down into buckets. All right, so we can get a better understanding of what's happening with the company loan portfolio. All right. We also see where the company talked about the partnership it has with RTA Biz Energy Partners. All right, so we know that deal. We talked about that deal already, where dollar will fund the company clients. All right, so it's a client that offer energy solutions. I mean, it's a business that offers energy solution to its client, and dollar will lend some up to 80% of the value of those energy solution, the solar panel, the water heater, the generator, all these things. Dollar will lend money to biz energy partner client. All right, but one of the issues that we saw with this partnership, again, we did mention that dollar does not have hands to lend money. All right, so dollar does not have a lending problem. All right, and we see that in the couple of reports the prospectus, and we are seeing it now in the second quarter report, where the company has grown its loan portfolio beyond the $1 billion mark. All right, so the company has a lot of business coming to it. All right, and this is just one of them. So dollar, the lending money is not dollar's issue. Dollar's issue is with collecting those money, pulling back those money fast enough so it can relend those money again and take advantage of the opportunities that exist. All right, but the issue that we saw with this partnership is that most of these loans will have a duration of some 3 years. I would believe that that's an issue. All right, we want to see dollar duration, loan duration cutting instead of increasing. At prospectus, dollars loan duration was some 12 months. All right, and this will increase the loan duration. However, I saw management in an interview recently, dollars management, and he was saying that the loan duration is now 9 months. All right, so I'm not sure if the duration is not talked about in this result, because quarter results are not as detailed as annual results. All right, but management state that the loan duration has decreased to now 9 months. So there's a 3 months that is shaved off the loan duration from prospectus date. All right, so we will look out for that. However, we're saying that this partnership will increase or put upward pressure on the loan duration, because the loan duration for these loans that the duration for these loans that the company is planning to make to the clients of RTA Biz Energy Partnership is about 3 years. All right. So we are glad that management understand the issue in terms of the loan duration, and they are trying to keep those loan duration shorter so as to make the company run more efficiently. All right, so as we talk about the loan duration, we want to drill into that specific problem that dollar has. All right. So as I said, at IPO date, the loan duration was about the average duration of the loans were about 12 months. All right. So what we want to do, we want to see how well dollar is collecting its money currently. All right. So if you look at what we're looking at now is a cash flow of dollar. All right. So if you look at the year ending December 2021, so that's just the other day. All right. So if you look at the year ending December 2021, and you can look at interest income at that point. All right. So dollars interest income at that point was $379 million. All right. So that's the interest income that dollar has outstanding at that time, at that particular day or date. All right. Now, in the 6 months ending June, we see where dollar collected $219 million in interest receivable. All right. When we do the calculation, that is about this interest receivable, the money that dollar collected was 57% off the interest outstanding at December, at the beginning of the period. All right. Now, as we said, dollar has a duration, loan duration, average loan duration of 12 months. Now, this report is a 6 months report. So dollar is supposed to collect at least 50% of the loan outstanding or the interest income outstanding. All right. And we're seeing where dollar collected more than the 50% mark. So at 6 months, dollar is collecting more than 50%. So dollar actually collected 57%. All right. So it's just about there. The company, I believe, has improved on its collection somewhat. And as I stated, I saw management in an interview, and management was saying that the duration of the loan is now 9 months instead of 6 months. All right. So that could mean that the company is actually doing some work on that problem that the company has. All right. So the company can collect the money faster or shorten the loan duration. All right. And management stated that it has shortened the loan duration. So we will keep top of that ratio to see how well dollar collects what is owed to it. All right, so as you know, blue collar finance, blue collar finance normally do the little something where nobody no really do. All right, so what we're gonna do is to look at a ratio that I don't think anybody really looked at. It is just our understanding of the operation of dollar that we're really on the heart of finance. All right. So as we talked about finance having a science to it and an heart to it. All right. So blue collar finance balances the two. All right. So what we love to do is to do our little experiment with figures and come up with ideas that is our idea, that is an original idea. All right. So as it relates to dollar operation, what I want to do is to look at this ratio that blue collar finance put together. And what it does is to really measure that same collection thing that we talk about. All right. That what we call mystery money. All right. We love to look at mystery money as it relates to the microcredit companies. All right. And the mystery money is closely related to the compounded interest on interest. That is a company collecting the money that is owed to it and unlending those money once again. All right. And to us, that is a cheap source of capital. And we really need to keep top of that. All right. So as it relates to dollar, what we're looking at is a 6-month result. All right. And these information is taken from the result that dollar released in the second quarter. All right, so dollar result is a bit choppy. All right, so we do not have a lot of information about dollar, and how the information is presented does not give us the opportunity to do vast or deep analysis of dollar. All right, because this, what we're doing, we want to compare this with the last year result. All right, but we are unable to do that because dollar has a 18 months result that it puts out in the prospectus. All right, so it is not a smooth or easy comparison that dollar allows us to make. All right, so this is the first figure that we're able to get, or this figure is the first that we're able to get from the information that is presented. But we will continue as a dollar move forward and start putting out more information to the market. We will continue to keep a top of this and continue to do the calculation of this particular figure that we're about to look at. All right, so dollar lends money. All right, and money comes from 3 sources. All right, so it's either dollar borrow the money that it lends, pick up the money from, equity. It can be equity money that comes from shareholders, like the IPO money the other day, or dollar can use some of the cash that it already has on the balance sheet. All right, so those are the 3 sources of money that dollar has to lend. All right, so what we see is that the cash that dollar has, all right, the cash loan that dollar made, the amount of loan the company made in the 6-month period was some $238 million. All right, so that's a lot of money to unlend in that short period of time. So the company is doing well. But we want to look at the source of money. All right, so what we notice is that the company never borrowed any money in the 6-month period. All right, so we are saying, where did this money come from, that dollar lent out? It did not borrow any money. All right, so the equity money, IPO money that came into the company was $250 million at IPO. All right, so we know the company has that. All right, the company repaid some loan. All right, so the company repaid some $80 million of loan within the 6-month period. So we know that also. All right, so that money is going out of the business. Now, when you look at the cash, as I said at IPO, the cash was some $2 million. I mean, at December 2021, cash was $2 million. And we see where cash is now $81 million. So the company is stacking up on cash. All right, so the company never used its cash reserve to unlend because the company never had any cash on the balance sheet at the time. All right, so what happened is that the company stock up on the cash that it has. So the cash balance changed by some $79 million. All right, so the cash never deplete, the cash actually increased. All right, so the difference in cash was some $79 million. All right, and that results in the company having some $81 million as of the ending of the period. All right, so when we do a calculation, the cash that the company has available to unlend was some $150 million. All right, and that's in green. So the cash that comes into the company plus the cash that it lends out plus the cash that it has on the balance sheet, that result in the company having $152 million to lend in terms of loan. But what happened is that we saw the company lending out some $238 million. So what we call the mystery money is some $86 million. All right, so this is money that the company lends out that the company never had. And the balance sheet or the financial statement is not showing where that money is coming from. All right, so the company never picked up that money, never borrowed that money, never take that money from its investor. It didn't have that money on the balance sheet. All right, so where did the $86 million come from that the company actually lent out in the 6-month period? And this money is what we call mystery money. All right, so we will keep a tab of this because this is the money that I told you before that Access is able to generate that the other microfinance company are not generating. I mean, Access is generating this at a high level. All right, the last time we checked, Access was making some, I guess, $500,000 of mysterious money. All right, so this is mysterious money. This is money that the company is collecting that is unlending again. All right, so one, this is the money. This measures the company's ability to collect its loan and relend those loans. All right, we would want to compare this with past performance, but we are unable to do so simply because dollar does not give us enough information to do the analysis. So what we would do is to keep top of this going forward. All right, so for the 6-month, dollar has a mysterious money of $86 million. This is money that we don't have a clue where it comes from in the system. All right, so there is no record showing where that money comes from. All right, so it's a good ratio or a good figure to keep tap of because it really tells a lot about the company. It talks about it gives us information about the efficiency of the company and the company ability to source cheap money. All right, so we will keep tap of that. All right, so something that we want to look at also is dollar. This new information that, or note that dollar released to the Jamaica Stock Exchange today. All right, and we want to just up over to the Jamaica Stock Exchange side to see what dollar is. The notes that dollar released today about some loan that it is planning on raising some debt financing. All right, so this is news coming out of Arbor Street today. All right, 19 July and it was released 4:30 p.m. after the closing or after the bell. All right, so it reads Dollar Financial Service advises that at a meeting of their board of directors held on July 15, 2022, approval was granted for the company to raise up to $1 billion in bond. All right, so as I said, Dollar gets the go ahead, the green light to raise up to $1 billion in bond. And as I said, Dollar has that room, that capacity to increase its debt. All right, because Dollar has a loan portfolio of $1 billion, and less than half of that, some 40% of that is debt. All right. So as I know a blue collar finance and you don't know the thing over here, you know, but always have to like, share, comment, so we can keep the conversation going. Chat here in the next one.